What is going on, everybody? We are live once again. Check this out. We've got hedge funds hold record bearish Bitcoin bets right now. So you've got all the hedge funds who have crypto activity, Bitcoin activity, trading against it. You've got a lot of them right now. The majority are in short positions, so they're expecting Bitcoin to drop. This chart kind of puts into perspective, all right? If you take a look at this, you can see how much short positions they're actually holding. And to put it into a real perspective, if you just compare it to the peak of the last bull market, which came in 2021, you can see that right now the short bets are multiple times what it was back in 2021. But that being said, got to put a little bit of context around this, because some of them are in short positions for an arbitrage play, which is probably beyond the scope of this live stream. And then you've got another massive chunk of them are in short positions just because they believe the price of Bitcoin is going to collapse. And I want to cover and go into more detail on that later on in the live stream and show you guys exactly where I stand and why, and what to expect for Bitcoin and what you should be doing in light of all of that information to put yourself in the best position to take advantage of what is going on. But before we get onto that, there is some good updates regarding the spot ETF. And remember, the Bitcoin spot ETFs is a way for people who didn't have access to Bitcoin, easy access to crypto previously, such as asset managers, such as those who were born in the older generation, right? So those who are like 60 plus, now they have access to Bitcoin very easily through the stock market, through recognized institutions like BlackRock, like Fidelity, and they can do it very, very easily. So it's brought a whole new wave of capital into the crypto market, which has caused the massive run that we've seen in recent times up to that $73,000 mark. Now we're a bit off that now, but price will get there. And again, I'll go and explain when we should expect that to happen, why we should expect that to happen a little bit later in the live stream. That being said, Morgan Stanley wants to beat UBS to become the first Bitcoin ETF bank. What this shows you is that the spot ETFs are still very much in their infancy. They're still very much new, it's still very much fresh, even though they have been around for a couple of months, and even though, you know, we have seen tons of inflows, it's still in the very, very early stages. Remember, these ETFs, they're going to outlive me, they're going to outlive you, and there's a lot more growth to come. It's just the beginning stages. A couple of months in, and we've already seen insane moves with regards to the spot ETFs and the activity and the result in the movement and price of Bitcoin and the stability of Bitcoin. All right, remember, right now this is unprecedented territory. We've never seen Bitcoin hold stability above and in the 60,000 range for so long. Back in 2021, 2022, when it did cross and get into the 60,000s, it only stayed there for a short period of time and then rejected and reverted down to the 50s and below. So right now, price is printing something it's never seen in its history. And it's really showing its territory in that 60,000 plus region, which is exceptional for where Bitcoin is going to be going in the future. But let's backtrack. Let's go back to this Morgan Stanley thing. So even though we've seen unbelievable activity in the ETFs, and you want to understand the achievements and the highlights we've seen for the ETFs, you got to remember, we've seen billions and billions and billions of inflows. It's overtaken gold in terms of the velocity of how much money's come into the ETFs. We've seen the ETFs accumulate 5% of the entire circulating supply of Bitcoin. We've seen the largest ETF, which is BlackRock, has had straight days since creation of the Bitcoin ETF of net positive inflows. Tons and tons of achievements, right? The first ETF in history to at the speed to get to 10 billion in inflows was BlackRock's ETF. The first in its history. I think it did it in a couple of weeks, not long at all. But we've still got a lot of participants who aren't involved yet. That's the key thing here. Even though we've seen so much activity, and even though it's set its mark in history, there is so much of the world still cut off from accessing the ETFs. Only a small fraction of the world actually has access to the ETFs. So you've got diversified financial institutions like Morgan Stanley, like UBS, their clients are not yet active in the ETFs. Now, that's going to come very, very soon. Morgan Stanley is going to come online. UBS is going to come online. The thing here is that Morgan Stanley and UBS coming online isn't going to get Bitcoin in isolation to over 100,000. That's not the point. The point is that you're going to get more money flows. Yes, it's going to be billions because they've got so much clients. Morgan Stanley have a lot of wealth management clients. UBS do as well. But it's the exposure. That's the key thing. It's the exposure. Because once you get big, diversified, brand name institutions in the financial space like Morgan Stanley, like UBS coming on board, what happens after that? Well, you get the Barclays coming on board. You get the Goldman Sachs coming on board. You get the HSB coming on board, which aren't yet on board and which aren't yet offering the ETFs to their clients. Now, when you are in a situation where you get all these massive diversified institutions offering the ETF to their clients, what happens? You get more and more inflows. And as that happens, you get a greater and greater accumulation of Bitcoin and an increased demand, which does what? Increases price. So this is coming, it's still very early stages. Okay. And you have to remember, only a small part of the world has access to the ETFs, predominantly just the US. And even in the US, not everyone has access yet. So we have well-capitalized areas in the world like Europe, the UK, the UAE, and the majority of Asia, which don't have access to the ETFs yet, but they will. Okay, I think I told you last time you have a couple of institutions out in Hong Kong who have sent their applications in for the Bitcoin ETF. Well, their clients and their capital that they manage is still restricted from Bitcoin right now as it stands. What happens when you get the UK, Europe, the US, UAE, Asia on board is suddenly you're able to double the amount of inflows that you've currently got into the Bitcoin ETFs. So right now they hold 5% of the supply. Well, you get the rest of the world on board, that 5% very quickly jumps to 10%. I remember this capital coming into the ETFs is very different from the capital that me and you would put in, because the capital that myself and you, well, probably not good examples, but the capital that the average man would put in, the average person would put in, isn't as sticky. Okay, what these institutions that manage money for their clients, there's a process and a procedure that they have to go through to actually sell their position. So whereas me and you, we could sell our positions at a click of a button, it's not the same for the inflows that are coming through from a Morgan Stanley or a UBS. Their clients don't just sell at the click of a button. They've got to go call their advisor, tell their advisor will have a conversation with them, right? So that's even if they wanted to sell. But then again, a lot of the capital coming in, they have a longer term outlook. They're able to ride through the volatility. Okay, this isn't capital coming in that is not going to be sustainable here. Okay, it's sustained capital, sticky capital, and reoccurring capital as well. That's one of the reasons why you haven't seen Bitcoin lose the 60,000 footing during this period, because these ETFs, they've set that foundation, they've set that floor level, because the inflows are coming in and they're not coming out. Okay, the capital that's coming in, again, they're designed with that longer term view. They're not, the capital that's coming in isn't trading capital. They're not going to be in it for 1 or 2 months. They are looking to be in it to ride through the cycles. Again, that's why you've seen Bitcoin show that stability and set that precedent of not falling below $60,000. If we take a look at what's happened with inflows, you can immediately see that over the last couple of days, it's definitely drying up. Okay, the inflows are drying up. We're not seeing the velocity that we are used to seeing come into the ETFs. Now, why is that? It's very simple. I told you guys, we are in a pre-halving pause situation. We're in a let's wait and see environment. Nobody wants to be making big moves in Bitcoin right now. Why would you? When you know that you've got a big event coming up in a very short time, a couple of weeks, should be April 19th, April 20th, right? That's not far away now. The market is clearly anticipating some volatility and is getting ready for a move down in the price of Bitcoin. If the market was getting ready for a move up, then you'd see tons and tons of inflows. So most definitely you're getting advisors giving the advice to their clients, suggesting that put the brakes on any purchases of Bitcoin, wait and see until the halving event, get that out of the way. And that's what I've been telling you guys as well. And not just now, since the price of Bitcoin has come down, from its high 10%, 12%. I told you this right when it was at 73,000 that this would happen. So we're in that pause environment. Let's wait and see situation going on right now, and that makes sense. That's why you're seeing dribbles into the ETFs. You're not seeing massive amounts of capital. Why would you? Everyone's waiting, and that's the right move to do. Wait, get the halving event out the way, endure some volatility, we'll get onto that, and then make your moves. The next explosion of inflows, and I do believe we will take out the high that was put in March 12th. March 12th was the single largest day of inflows. I do believe that will be beaten, right, as we go into this post-halving time period. It's going to come after the halving event. You're going to get massive inflows coming in. It's just a pause right now. Let's take a look at price. Right. Let's scroll out. Look at the... Okay. So the halving event, this white line is coming up very soon. Not far away now. Only a couple of days. But what should we expect as we move into the halving? What should we expect as we come out the other side of the halving? And then looking further down the line, what's to come in the price? Immediately, we know that this was the high that was put in, about 73,000. We put in another high right here of around 71,000. The fact that we failed to break that previous high is a sign of exhaustion in the market, a clear sign of exhaustion. If we aren't going to surpass the previous high, we're going to put in several attempts to try and beat that high, and we fail. That's just a sign of exhaustion in the market, and that can't be ignored. Remember, this is current analysis of price. This isn't what is price going to be doing a couple of months. Okay, this is what's going to happen in the very near term. We're talking weeks. So the market is in an exhausted position. Now, there is a clear trend line that has formed. Okay, very clear trend line that's formed. And what's happened at this trend line is we have what we call a buildup of liquidity. So we have a buildup of long orders, long positions coming in at this level, long positions, long positions, long positions. When the market gets a sniff of this buildup of liquidity, you can guarantee that what the market is going to do is going to wipe everybody out. It's just a fact. It happens every day. And that's what's happening now. We have this buildup, right? So whereas some people may see this as one of these weird triangular patterns, and what they'll do is they'll be like, yeah, it's going to move around here, and expect some sort of explosion in price like that. No. What we should expect is for price to take out all these positions here. Okay, everyone. And that would make perfect sense. We move into the post-halving. Yes, the halving is a very good situation for Bitcoin in the sense that it starts the supply crunch. It starts that supply scarcity. But before it rewards any investors, before it rewards any traders, it's got to do some damage. This would be the perfect damage event to take place, for it to break this formation and liquidate all of these long positions. And where price would go after doing that would be between the $55,000 to $57,000 level. At $55,000 to $7,000, you're going to get tons and tons of short positions built up. The hedge funds are going to be right. I showed you that in the beginning. And then you're going to get a short squeeze situation where price reverts. I should have actually done this on the other side of the halving, right? Down here. Then you're going to get a short squeeze situation. You're going to get elevated price levels. You're going to get movements higher. You're going to start breaking through these resistance barriers that price put in. And then you're going to get price moving into the high 70s, the low 80s, and start doing some price discovery at those elevated levels. And then at those levels, you're going to start to get the media coming on board, talking about how Bitcoin is now at $80,000, unprecedented territory, never been there before, post-halving situations happening. People are going to be like, what the hell is the halving situation? Bitcoin, I thought it was 55,000, now it's 80,000. Then you're going to start to get the retail coming on board, being like, Bitcoin wasn't going to 30,000. I thought it was going to collapse. No, I was wrong. Now I need to jump in before I miss the train. Now they jump in, layered price. Now it's 90,000. More and more buying through the ETFs. You get Hong Kong coming on board, inflows coming from Hong Kong. Now price is at 100,000. You see, that's what's going to happen. But now we're in a very quiet period, a very timid period where nobody's really talking about Bitcoin. Nobody's got their eye on the ball here. Price is looking weak. Price is just trading sideways. But that's what's going to come, right? That's what's going to come in the next iteration. But you want to be mindful of timing here, okay? Because we've got a couple of weeks up until halving. I don't expect too much price action between now and then. And I've said that for like the last week or two. I said don't expect too much to happen to